Now that I've covered the individual components of the Ichimoku indicator, for the first time I start to put them together into a full trading strategy. Stay tuned, back after this brief message. Darwinex is a UK FCA regulated broker and asset manager on a mission to disrupt the financial trading, investing and asset management industries. If you're a talented trader looking to attract investor capital to your strategies, Darwinex is the fastest way for you to do this. We enable traders to raise third-party investor capital and then charge success fees on high watermark profits. Additionally, Darwinex itself invests in its traders with our seed capital allocation program that allocates up to 90 million euros per year in successful trading strategies. So, if all of that sounds interesting, learn more by clicking on the link here, or you can find further links in the description right below. Now back to today's tutorial. This episode will look at the first of the Ichimoku strategies that I'll be covering in this series that I've called Spotlight on Indicators. This first strategy is what is called the Tenkan-Kijun Cross. Let's take a look. But before I get into the details of the strategy, I want to just cover some principles that I'll be adhering to as I go through all of the strategies that I'll be covering. And the first is that I'll be keeping all of them simple. In my experience, simple is always better than complex. And so, although I've seen some Ichimoku strategies that have 12, 13, 14 rules in order to trade those, you won't be seeing any strategies like that from me. For me, that level of overcomplexity rarely leads to a robust, profitable strategy. Also, the strategies that I'm going to be covering at this point, while we're looking at the theory, will represent what I'm calling a starting point. As soon as I get into the research and development phase, where I start to see how the indicators really perform, I may well determine that there's a reason to change the rules of those slightly, or just generally do things differently. And that's all part of a normal strategy development process. Also, while I'm looking at Ichimoku, as you've heard me say before, this is what is sometimes termed an all-in-one indicator. So it can provide you with filters, such as a trend filter. It can provide you with signals and shorter-term triggers. And so while I'm studying Ichimoku, that is the only indicator that I'll be using. And then finally, any strategy rules that I come up with must be capable of being fully automated and also robustly tested. So as an algo trader myself, rules have to be definite. There are no grey areas or judgment calls to be made. And so all of the rules I use will be precise so that they can be built into code. Now, let's just cover a warning before we proceed. Trading does carry a high degree of risk, and please do not look at any strategy that I go through as part of this series thinking you can then just go away and start to trade that. It is your responsibility to make sure that you thoroughly backtest a system yourself and you satisfy yourself that it has a tradable edge, also that it can be aligned to your personal objectives and your personal appetite for risk. And I suggest you take the same approach that I take, which is I don't believe anything anyone ever says, either on a website or in a video, until I've tested that out for myself. And you should take that same approach. And of course, you shouldn't risk any capital in trading that you cannot afford to lose. Okay, so let's get into the strategy. So I said this is called the Tenkan-Kijun Cross, and the rules that I'm putting on the screen now apply to long positions. And in order to transfer these to a short trading strategy, you'd simply reverse those rules the other way around. So the signal here for a long trade occurs when the Tenkan-Sen line crosses over the Kijun-Sen. There are a couple of filters also that we're going to rely on from other parts of the Ichimoku indicator. The first is that when that crossover occurs, it should be above the Kumo or the cloud, and that helps us to get into already established trends. Because if price is above the Kumo, that's one indication that we're in an uptrend. But we might have suffered a small pullback, and then as price then continues, that could be a good place to get into that established trend. And the second filter is to do with the Chikou Span line. And this also should be above the price. Now remember, because the Chikou Span is plotted 26 periods in the past, we have to interpret the price at that time for the latest value of the Chikou Span. So I'll show you this in a chart in a moment. In terms of closure rules, my initial thought for testing here is simply looking for a Tenkan-Sen Kijun-Sen cross in the opposite direction. And that would get us out very early on in any pullback. Now, I might change that as I start to research this indicator and could look at alternative rules like price entering the Kumo, for example. But to start with, I think it would be best to stick to this reverse crossover. Now, in terms of a stop loss for this strategy, I'm not sure yet, because as you'll see in a moment, when we look at a chart, the reverse crossover to close off the trade will almost certainly happen before any stop loss would get hit. And so although I might still set a stop loss just in case something goes wrong with the strategy stops working, I've still got that protective stop loss in there. But under normal circumstances, I don't think the stop loss would be actioned very often at all. I think the trade would usually be closed as a result of that organic closure rule. Now, this particular strategy will work best, as I've said, when a trend is already established. So you'll notice that the Tenkan-Sen, which is the red line here, and the Kijun-Sen, which is the blue line, are crossing over quite a lot during this congested period. But whenever you see the different lines of the Ichimoku continually crossing each other like this, really all trading should be avoided, because it just means that price is congested and the indicators and the price are continually crossing over each other. Instead, you want to look for some nice price action like we see here, where there aren't continual crosses of all of the different elements of Ichimoku, and things become a lot clearer here. So we have a green, which is a bullish Kumo. Price is above the Kumo, again giving us confirmation that we are in an uptrend. And if you remember our discussions about the Chikou Span, which is this yellow line here, and if that is over price, again, that is an indication that we're in an uptrend. And so all of the elements of Ichimoku are in agreement for this period of time. So let's take a look at some of the crossovers then of the Tenkan-Sen and the Kijun-Sen. So we can see one of those here. We can see another one right here. And if we think about our rules, is the crossover happening above the Kumo? And yes, it is in both of these instances. And is the Chikou Span above the price? Now remember, we have to go back 26 periods because that is where the Chikou Span is plotted. And if we look at this particular crossover here, we go back 26 bars, which is this bar here, we can see that it's well above. And likewise at this point here, where we get the Tenkan-Sen crossing over the Kijun-Sen at this point, again, if we come back 26 bars, we can see again the Chikou Span is well above the price action. So both of those filters that we talked about would apply when these crossovers occur. And as you can see, following each of those, price continues on up. Now we have another crossover here just after price has got some support from the cloud, which we looked at in the previous episode. So here the crossover is occurring above the cloud, only just, but still above. And so let's go 26 bars back, which is this one here. And again, the Chikou Span at this point is again above the price action, but only by a small amount this time. So both of the rules are still good to go, but our confidence might be a little bit lower this time. But regardless of that, price does continue upwards. We get a potential closure of the trade here as the Tenkan-Sen comes below the Kijun-Sen. But then very quickly we would enter a trade again as it crosses back over, because again both of the filters still apply. And the closure of the position would occur at this point, again when the red Tenkan-Sen here crossed below the blue Kijun-Sen. And this time, instead of getting another cross upwards to indicate that the uptrend was going to continue, we never see that occur. Price then comes through the Kumo, breaks through that, indicating that this medium to long-term trend that we've been trading in and out all the way up here has now come to an end. But of course, once this downtrend is established, we could then start to look for crosses in the opposite direction. And we get one of those crosses right here. And remember, we need to reverse our rules for a cross in this direction, and we need to be below the Kumo, which we are by a substantial amount here. And the Chikou Span, of course, should now be below the price. So going back 26 bars, that it is very much below the price action at that time. So this could then provide us with this entry for a short position. And using our rule of a cross in the opposite direction, we eventually get that down here when the price action is pretty much at its lowest here. Now, there are some additional rules that I want to test out during the R&D phase. So, for example, I've been looking at a rule here where the crossover must occur above the Kumo for a long trade and below for a short trade. But one of the things I do want to test, just to satisfy myself that that is a valid filter rule, is to also test what happens when the crossover happens on the opposite side of the Kumo, or indeed inside the Kumo. Now, I don't expect them to provide results that are better, but it's just something that I want to try out to help confirm to myself that this is a valid and good filter. Another thing I want to look at is whether we have a bullish or bearish Kumo 26 periods ahead of the price action at the point a crossover occurs. And lastly, because as I mentioned previously, I'm a little bit unsure about a valid stop loss strategy for this, I may well try out a number of options there also. Okay, so please let me iterate the warning that I gave earlier on. You must test all of these strategies out yourself before trading them in a live account. It's your personal responsibility to do that. And if you're in any doubt whatsoever, then please stick to a demo account. Okay, in the next episode, I'm going to move on to a different Ichimoku strategy, one that I'm calling the Kumo breakout. There'll then be 3 other strategies that I'll look at before going into the R&D phase for all of them to see which are the most effective and hopefully start to identify which might provide us with a decent trading strategy and of course which will not. Okay, so if you want to find out more about Darwinex and find out about how we connect talented traders with investors, then you can click on the Darwinex link that's going to appear on the screen in a moment. Alternatively, you can get a link from the description in the video, and I really would urge you to take a closer look at that and hopefully understand some of the advantages of trading with Darwinex. Okay, so that's all we've got time for this episode. Until next time, trade safe.